Councillor James Lawless, Cllr North, and I am speaking on the motion number 68 that this Ardèche condemns the banks for not passing on interest rate relief to homeowners across the country. Delegates, a mortgage is the single biggest financial outgoing for a family. There are at least 300,000 households on standard variable rate mortgages, including my own. These families have benefited least from the current low interest rate environment in Europe. For a typical €200,000 mortgage, a standard variable rate customer will pay €6,000 a year more than their equivalents on a tracker mortgage. Fianna Fáil has led the battle on behalf of these customers for fair treatment, and this week our finance spokesperson, Michael McGrath TD, extracted a commitment from AIB to reduce their variable rate in the next couple of weeks. This is real progress, delegates. We all understand the need for the banks to recover, but it cannot be at the expense of hard-working homeowners who are being squeezed on punitive and unjustifiable interest rates. The banks are now in public ownership, and they must bear social responsibility. It is our firm belief that the rates being charged are not justified based upon the cost of borrowing. The extent of the problem can be seen from the fact that the standard variable rate for residential mortgages by the state-owned banks, Permanent TSB, AIB and others, is 2% higher than the same package, the same product across the eurozone. In fact, on this island, customers in the north of Ireland for the same mortgage package are paying 2% less than our customers in the Republic of Ireland, 2% less differential two sides of the border. It is not good enough. It is an insult for the banks to claim that losses on tracker mortgages are somehow justifiable to rip off their standard variable rate customers. It would be no more justifiable if the customers were asked to make good the losses on these tracker products than if they were asked to pick up the tab on development losses or commercial loans or any other part of the loan book. The challenge of tracker mortgages must be tackled as part of an overall review of banking debt. The government are simply wrong to say that they cannot intervene. In fact, in 2011, they were happy to claim credit in persuading the banks to reduce their variable rates at the time, but since then, very little has been done. It is unacceptable that the Economic Management Council has not met the banks since June 2012, 3 years ago, and it is only under pressure from our party that progress is now being made. The Irish taxpayer has already had to bear the burden of banking losses. Variable mortgage rate payers should not now have to bear the burden of tracker losses. For too long, the banks have been part of the problem. It's high time they became part of the solution. Banks, do the decent thing. Cut your variable rates now, in line with the rest of Europe, and give a break to ordinary Irish families. Apart from being socially responsible, it is just good business sense. More affordable rates mean less arrears, mean more people staying solvent, more people staying in their home, more people making repayments, a better book for the banks and a better deal for their customers. Delegates, no other party has given this issue the attention and commitment that we have. As a campaigning party, we have put this issue at the centre of our policy platform. We are proud of what we have achieved to date, and we will continue until the shameful and inequitable treatment of variable mortgage holders is ended. Delegates, go raibh míle míle maith agaibh.
Councillor James Lawless from Cllr.